Hello there. Thanks for watching my video today and your company. My name is Shanti Dugad from Mumbai. So, in my do's and don'ts video for stock investment, I got a feedback from some of my friends and investors saying that they would like to understand the concept of fundamental and technical analysis in more detail with some practical example. So I had uploaded one video on Reliance Industries analysis, and today in this video I'm going to explain the Tata Steel example as an example to fundamental and technical analysis. So if you look at here, what I have done, I have plotted the key financial numbers from P&L of Tata Steel for last 14 years, starting from FY07 up to FY020, and then these are the balance sheet items from here up to here, both assets and liability side for 14 years. And then this is the cash flows, operating cash flow, investing cash flow, and financing cash flows. And this is number of shares at the end of each year in crores. So after plotting these numbers, what I have done, this is the cumulative figures in last 14 years for the P&L items, and this is the average, long-term average of last 14 years. This is medium-term average of last 5 years, and this is short-term average of last 3 years for each of the financial numbers. So it will give you some perspective, long-term perspective, medium-term perspective, and short-term perspective, how each financial number has averaged. And this is the compounding annual growth rate based on last 14 years figures, last 5 years CAGR, and last 3 years CAGR. So you can make out that Tata Steel sales have grown at 15.2% CAGR on last 14 years basis, but it has not grown in last 5 years at all, 0% growth, and in last 3 years it has increased by 7.6%. Similarly, if you look at the EBIT and EBT numbers, last 14 and 5 years it is in the green zone. It has been increasing phase, but last 3 years it is showing negative growth rate. Similarly, if you look at the net profit trend, last 14 years it has grown marginally at 6.2%, but in last 5 years and 3 years the situation of the net profit growth is negative, very bad. So that's why investors are discounting this share, and they don't feel that in future also this will grow. That's why the share price is highly depressed at this moment. If you look at the trend of shareholders equity, let's say, which has grown at a good pace, 12.4% to 26% in 14 years and 3 years respectively. Similarly, if you look at the trend of liabilities, the long-term liabilities here, the liabilities has grown around 11% range in last 3 years and 11.1% in last 14 years. The total loans funds has also increased between 10 to 11% during this period. Cash flow, if you look at, the company has invested almost 2 lakh crore rupees in last 14 years. Whereas if you look at the return on this investment, it is actually negative. The profit, which was 4,166 crore in FY07, is now only 985 crores on consolidated basis. And this is a reflection that whatever investments company have made in capital expenditure or acquisitions have not yielded good results. And even if we exclude this, if we take the highest profit earned in FY18, 17,700 crores, so the increase is about 13,000 crores compared to FY7 in 11 years. And on an investment of, let's say, from, if we take a cumulative investments from FY07 up to FY18, so company has invested almost 160,000 crores approximately during this year, with an incremental profit at the best case scenario of 11,000 crores. So that shows hardly 6-7% return on the incremental investment. So that's why the additional investment made by the company has not yielded good results. That's why the share price of the company is quite depressed during recent times. If we look at other ratios like EPS of the company was 75 rupees per share, and it's now only 8 rupees per share. And even if we take the average of last 14 years, it's coming 38.8, 34.6 for last 5 years, and 83 rupees for last 3 years. So EPS, in fact, there is hardly any growth on long-term basis, and negative growth in last 5 years and 3 years. The other ratio, book value ratio, per share has grown up it's in the red zone. The book value per tangible assets has also grown up, so it's in the red zone, in the green zone, sorry. The operating margin has been between 12% to 16% range in 14 years and 3 years basis. The net profit margin is very, very low, 2.6% and 3.1%, which shows the company's profitability is very sensitive. Any slump in steel demand or market or the pricing will immediately dent into the net profit, and the company may turn into red. That's why the prospective shareholders are not valuing this company as at a good price. Return on equity, which is again important ratio, it's between 8.4 to 7.9% in 14 years and 5 years basis, which is reasonable. And in last 3 years, it has been good, 14.2. So that's why it's in amber color here. ROCE, which is again a good measure to watch how efficiently company has been utilized its funds. So that's around 10% range. So that is good, both long term as well as short term. The asset turnover ratio is in the amber color. The average collection period have reduced over the period, so that's a good sign. If you look at the current ratio is better than 1, so it's in amber color, but not there is adequate margin of safety. The long term debt to equity ratio is on the higher side, 1.81, 1.83, 1.59. So again in the red zone. The cash and cash equivalent as percentage of market cap, which is has gone as high as 17.8% in last 14 years average, but the recent average is coming down, so it is in amber zone. The price to book value ratio is ranging between 1.13 and 0.92. And but if you look at today's price of 370 around, the ratio is coming 0.62 based on the last published book value. So it shows that it has been very highly discounted and the share price has been hammered a lot. So that's why this is now prevailing at significant discount to its book value, both price to book value and price to per book value per tangible assets. Now, if you look at the average PE multiple of last 14 years, it has been in the 12.04, 12.82 for last 5 years, 6.3 on last 3 years basis. So you can see clearly here the last 3 years the company's PE ratio has come down significantly, almost half, and it has been discounted sharply by the investors. But if you look at the today's market price with the last uh, published EPS, it's coming 45, so which is very, very high. However, we have to look at the future forward earnings per share to have a real judgment on the PE multiple, whether it is overpriced or underpriced. The dividend yield last 14 years has been 2.4%, and based on current price, it is coming around 2.7%, which is not so great. That's why I have put in the red zone. Now, let us analyze the company's from a different angle. If here what I have done, this is first I will use the technical fundamental analysis. So fundamental analysis, this is the standalone profit of the company for last 14 years. I have plotted. We can do this exercise based on the consolidated profits also. So last 14 years profit average is coming for the 5,862 crores, and this is adjusted EPS of each year. When I say adjusted EPS, it means that here the actual EPS of that year I have adjusted with the increase in number of shares recently, because that is the real EPS. If the profit would have been of the same year and number of shares is as per today, what would have been EPS? So this reflects that, so that we can have an apple to apple comparison. So it has increased from 39 rupees to it has remained in the same range, like there is hardly any growth. But average of last 14 years, which covers both bullish period as well as the slump period, is coming 48.04. So the average PE ratio, if we calculate based on the adjusted EPS, it comes between 17.34, and the average is coming 9.54. The last FY20 is coming around 7.65. And if we compare with the today's market price, let's say 370, with these, we divide this by average EPS. So the PE ratio comes to around 7.7. Even if we divide it by the latest available EPS of 39.64 for FY21, this is on the only first quarter annualized results, it will be around 8 or 9, let's say. so which is good. In fact, the company's share price shows have been discounted already so much. However, we have to look at the future forward earnings, as I said, and then calculate all these ratios based on those projections. The average dividend yield here, it's not so great, and the average of the last 14 years has been 2.4%. And book value per share, this is again an adjusted book value because this is calculated based on the today's number of shares dividing by the that times this that year and shareholders equity. So from 227 rupees it has already increased to 619 rupees, almost 2.9 times. And based on today's market price, the book value to price to book value ratio is coming 0.82, which shows a discount, whereas the historical average has been around 1. So like return on equity, again a very important measure to look at. So return on equity was 19.2%, and it has gone as high as 32% here. But in between, it has been showing negative equity growth also, equity return on equity, many years. So that's why it has been like patchy, not real trend you can work out. And the average of last 14 years has been dismally low, 6.4%. It does not reflect that company has been able to return good return on its equity. Now let's look at the technical factors, the high, low, and average achieved of last 14 years. Here I have plotted again. This is based on the today's number of shares. If the company has issued any bonus shares, I have adjusted already into this pricing in all the three scenarios: high, low, and average. And the highest average of the highest price has been 624. Average of the lowest price has been 298, and average of the average has been 458. So if you look at the current price of 370 is significantly discount to the average of the highest achieved. Even if we compare with the average of last 14 years, current price showing highly at discount price. So this shows the company share price has been hammered a lot, and this may be a good opportunity to buy and accumulate this stock at this price, because if the history repeats itself in future, then we can see a significant upside in the share price of the shares. To put this in the graphical form, here if you see here, this is the high price. So second year high price has been lower than the previous year high price. The trend is reducing. In between there was a only small blip upside, and then again it came down. For 2 years it gone up, and now for last 3-4 years it is showing a downward trend. And this is the average of the highest. This green color is the average of the average, and the bottom one is the average of the lowest point achieved. And this purple line is the current market price. So we can see here the purple line is far below the highest average and also below the average of average. So that shows the current price is at a very significantly low compared to the historical average, and it may give us some upside in future. However, again, put a caveat here. This is only a historical numbers analysis. What we have to do is to do a forecast analysis based on the future profitability earnings of the company, depending on its market dynamics, under what phase the steel industry is at this moment, how much capacity expansion company has done. So that will give you some indication that how the future earnings is likely to be, and all these ratios you can calculate on future forward earnings rather than the historical numbers. Historical numbers will give just a perspective how the company has been performing in the past, and it is not the proxy of the future that we should take note of. So this is all about the Tata Steel. In my next video, I will be presenting some more investment related topics. So if you like this, you may forward to your friends, and you can click on the bell button so that anytime when I upload my next video, it will give you an automatic notifications. Thank you very much. Bye for now. Happy investing.